It's pretty interesting, right? Your view is that we might go into a recession because a lot of people hear recession and they think, oh my God, this is going to be so bad. I mean, but pragmatically, we've had a ton of growth. And in fact, like for property investors, that actually isn't really going to matter anyway. And I mean, you said obviously, you used the words obviously things will soften a little bit in reference to property prices, I think is what you're referencing there. But very interestingly, I have been doing some pretty deep analysis on the whole interest rate thing.
Yep.
And property median sales price growth, right? So the percentage rate of change, not median sales price, right? So not the prices, but the growth rate, that goes all over the place, right? And it's completely uncorrelated to, or generally uncorrelated to interest rates. However, in all of the times that we went into a negative growth, right? Negative growth rate, which means actually property prices have gone down, right? All of those correlated with a time where interest rates were also going down, not up. So the only times in the last 30 years where median growth rate has gone negative has correlated actually with the time where interest rates are going down, which is really interesting, right?
It is.
And it's really, truly fascinating. And
yep.
I think that one of the reasons that people get so freaked out about it is because you have in the media, you have a lot of economists and stuff saying, oh, yeah, interest rates go up and property prices go down and all of this kind of stuff. And the economists are the ones that get a lot of airplay in the media. Now, I was having a bit of a think about it. I was actually talking to Gabby about this morning. And I said, it's absolute nonsense. She said, well, why do people believe that? And I said, well, okay, because mostly it's economists that are saying that this thing's going to happen. And economists see the property market the same as they see the financial markets, right? Which is just not the same, because in the financial markets, in the financial sector, like business and shares and all of that kind of stuff, as interest rates go up, profitability goes down, values go down, right? That's the impact, right? So if you look at the stock market correlation with interest rates, interest rates go up, stock market goes down, generally speaking, right? But the thing is, real estate is not the same as the financial market. And so you've got these people making commentary based on it being a type of market that it is not. And therefore, that's why they get it wrong, which I think is pretty interesting. What do you think about that?
No, I completely agree. It does correlate with the share market, obviously business as well. So keeping in mind, I'll have a sly little dig there. These are the same economists that were predicting 15 and 20% decreases in property values across Australia, as COVID obviously hit as well. So, and it is, it's throw a dart at the dartboard. I mean, you look at each different bank, their chief economist has a different opinion on what's going to happen. So my advice to our listeners, don't read the papers, seek advice from your property experts like Dashdot and yourself, Goose, and obviously your brokers, and, make sure you've got buffers in place. Make sure your loans are actually set up correctly, to navigate this, this what I'll call a small interest rate rising period. But just get everything checked over. So,
would you know the last time that interest rates rose by 2%, property prices doubled in many parts of the country. Right, this is the thing that people don't get. Right,
so no, I think it's I mean, with interest rate rises as well comes buying opportunity. Yeah. So I think now is the time in the next few years, 1 or 2 years, where you could really purchase good properties in good suburbs in good states, and when hopefully the interest rates start coming down again in 18, 24 months time, consumer confidence comes back, your first home buyer market comes back, the investors, not the professional investors, but the mum and dad investors come back in the market, obviously overseas immigration, the buying opportunities that you create for yourself in this, small period of time over the coming years is going to set you up for, good growth.